All righty, another day's here for stocks. Cheers, by the way, guys. I appreciate you all for tuning in as we're going to break down the stock market, go figure, and 5 companies, 5 stocks in particular that just reported earnings. We have to break down the numbers, the charts, what I'm looking to do. But first, hit the like button. Do not forget to subscribe. Join the free email stock newsletter linked down below. And of course, take a sip of your coffee. You're going to need it for this video. And let's dive into it. So it's currently about 10:30 a.m. on the East Coast. We're about an hour into the session today, and we have green across the board. The S&P's up about 0.75%. Same with the Dow Jones. QQQ's up almost 1%. And get this, the Russell is up over 1%, as the VIX is down about 4%, and we have gold down 1%, and we have silver pretty much at break even. So a nice green day across the board right now, as SPY is testing, is trying to break out of the highs from a couple of days ago. You guys can see we hit earlier this week. That might have been the end of last week too. We hit 568 on SPY, which we haven't taken out the highs from last week yet this week. Today's Thursday. Obviously, tomorrow we have Friday, the last day of the week. So we'll see if we take those highs out. You know, at this point, we're pretty much at the highs from last week, 565, 568. And if we're able to break out of there on SPY, start building momentum there, that's where we could be going for the next leg up. And at that point, guys, the next spot we could be testing is 575. That was the high, it looks like, here from the end of March. Then if that were to break, now we're talking even higher. And QQQ, which is up 0.75% right now, about 0.8%, it is also testing the highs from a couple of days ago, from the end of last week, which you guys can see on this 30-minute chart, or this 15-minute. I'll pull the 30-minute up. You guys can see it. Yeah, so we hit 490, 491 last Friday, I believe, and then this week we've kind of been consolidating, and now we're testing 490 again. We hit it this morning, got rejected. Now we're at 487, trying to get back to 490. So if that breaks on QQQ, we could be going a lot higher. Momentum could be building up. So that's a quick rundown on the indexes right now, guys. Big resistance on SPY and QQQ where we're at now. But again, if we're able to break out of here, which all signs are pointing to, by the way, we have a golden cross. We're above the moving averages. If we're able to fully break out, we'll see a lot more momentum to the upside, in my opinion. Of course, do your own research, trade at your own risk. You guys know the deal, but yeah, let's get into these stocks. We have 5 companies that reported earnings this morning. So without further ado, let's get into it. By the way, guys, hit the like button. Make sure to subscribe. Follow along for more content. I appreciate you guys as always. So Shopify, SHOP, the stock's down 2% on the day right now, and they reported earnings this morning, and the stock actually got down all the way to $84 per share. So it was actually down a lot more. It's down 2% on the day right now, but at one point it was down 12%. You heard that right, 12%. So Shopify reported earnings. Let's see, EPS of, where are we at here? EPS of 20 cents, or no, they lost 53 cents. Wait a second. They lost 53 cents, and that missed the 20-cent profit expectation. Wow, big miss there. But sales beat 2.36 versus 2.33 billion. So they beat on sales, and they see Q2 sales of 2.53 to 2.57 versus 2.5 billion. So that's good. Let's see here. Adjusted EPS, any guidance there? Not seeing any guidance there. But yeah, the stock's got to be going down because of that wild miss on EPS. They lost money when they were expected to make 20 cents on an adjusted basis. Not ideal there, and it looks like the little mini downtrend on Shopify is continuing, right? You guys are noticing we're putting in these lower highs as of now. Boom, lower high right there, lower high right there, lower high right there. So we're putting in these lower highs, but at the same time, we're actually putting in, funny enough, higher lows. We're trying to fight and maintain this uptrend. You guys can see it right here. We're trying to make an uptrend, but at the same time, we have these lower highs. So what direction are we going to pick? Right? I'm going to set my alert at $100 a share. If we're able to get out of there on Shopify here, guys, that's where it could really start to move, but we're not there yet. And by the way, keep in mind, that miss on EPS, not ideal in the short term. So PTON, Peloton, you guys know Peloton. Their stock is down 9.5%. The company reported earnings this morning, and not Shopify, Peloton, guys, it it is down like 95% from all-time highs, even more than that, like 98. It's just a disaster, and obviously, for obvious reasons, Peloton. It's the pandemic days are long gone, right? And the company's been struggling since. And clearly their stock's down, so it must have been rough numbers-wise. So EPS came in at negative 12 cents. That missed the negative 7 cents expected, so that is not good. Sales, $624 million versus $621 million expected. And the fact that they're still doing $600 million of revenue is impressive. I mean, who's buying Pelotons at this volume? I don't see them anywhere anymore. I don't know about you guys, but I truly don't see them anywhere. And they narrowed their full year 25 sales guidance from 2.43 to 2.48, now to 2.46 to 2.47 billion dollars versus 2.46 billion previously expected. Not the best there, but yeah, man, Peloton at this point, if you're buying this stock, I don't know what to tell you, At this point, as a standalone company, I think there's not much value, but if they get bought out, maybe you can make some money on the stock. Let's say if they get bought out for $10 a share, hypothetically, we're just throwing numbers out. All right, maybe you'll make money on the stock there, but yeah, I'm not a big fan of Peloton. Fundamentally, it's just not ideal right now for this company. And on the charts, well, the charts do not look good. PTOM, watch it, but I'm staying away from it. I just covered it because the company just reported earnings. So the next one here is Warner Brothers. Warner Brothers Discovery, WBD is the ticker. Their stock's up 3.5% after earnings. So let's see what WBD did. They reported earnings per share. They lost 18 cents. That missed the loss of 11 cents expected, and they also missed on sales. Oof. Let's see, 8.98 versus 9.6 billion. Wow, double miss for WBD. Very bad double miss. And the stock is, again, somehow up 3.5%. Isn't that funny? Isn't that funny how it works? A company reports awful earnings, and then boom, the stock's up. Maybe because it was oversold heading into earnings. I don't know. We can see it collapsed in the beginning of April all the way down to $7.50 after being at $11. So maybe it got too beaten up there. But yeah, it's up 3.5% on a double miss, WBD. And I don't know. Maybe it starts playing in this window right here. We'll keep an eye on it. Crocs is another one that was this morning. Crocs stock is up 8%. We're starting to break out of this trend. We're above the moving averages now, which is great, and we're approaching the multi-month resistance at about 110, 115. This has been where Crocs has struggled really ever since the beginning of December. So we're talking like 5-6 months now we've been struggling here. So Crocs, let's see what they did. They reported earnings per share of $3 on an adjusted basis, which beat the $2.48 expected. Sales came in at $937 million versus $907 million. So nice double beat for Crocs. Am I seeing anything here on guidance? Actually, 2025 outlook withdrawn. So they're pulling guidance, guys. I'm assuming a lot of their product comes from China, probably. They have uncertain guidance right now, so no guidance is better than bad guidance or uncertain guidance. So that's pretty good that they withdrew the guidance right for now. And the stock's up 8%. Not bad, not too shabby of a move here, guys. Let's see if we're able to take out 115 and start really moving from there. So last but not least, guys, COP. ConocoPhillips, energy company. Their stock's up 2.3% right now. ConocoPhillips reported earnings per share on an adjusted basis of $2.09 versus $2.07 expected, and revenue came in at 17.1 versus 15.82 billion. So a great double beat for ConocoPhillips. And let's see here, anything worth mentioning? They see Q2 production of 2.34 to 2.38 BOE. What's that? Barrels. I'm not familiar with what that is, or I'm forgetting. But 2.34 to 2.38 BOE a day. So that's pretty good there. They cut their full year 25 capital spending view. But yeah, I mean, look, they double beat. Great beat on revenue, and the stock is moving. Still very much in a downtrend, obviously, but it's starting to get some momentum. 2.5% in the green. Not too bad. So that's pretty much it, guys. Those are 5 stocks I'm watching right now that just reported earnings. Let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe. Come on, don't forget to do that. And of course, join the free email stock newsletter. Check out the Patreon if you guys want to keep up with what I'm doing in my portfolio every week. That is down below. And with that being said, guys, cheers. I'll catch you in the next video.